Hi traders, and welcome to the Technical Analysis Market Watch on the last day of March. Well, it's come around very quickly and we've had a pretty strong week this week, and some of the majors are really starting to flex their muscle. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so I'll start out here with the Aussie USD as we always do, and it's always a good one to start with. And you can see that we've had that little bit of a bounce up to the 20 moving average here. I'll zoom it right in. Look, this has been in place for quite some time now, but the 20 moving average is still holding it up. It's really trying hard to actually break past this zone, and in reality, if we had have seen a test of this bottom here at around the 65.80 level, there would have been probably a little bit more, weakness expected at this zone, believe it or not, because then we've got a channel forming. But the fact that the low did actually stop a lot lower than, or a lot higher, I should say, than the low at the 65.80 is telling us that there may be a little bit more strength here than we can actually see. So in reality, we know that we've had a couple of weeks trading now where the 20 moving average has held up all of the price. We know we had these big wick rejections, but it is no question a very strong reversal area. So the 67.20 area is very, very strong. Okay. We can see this whole box here is actually a very strong resistance zone. So what we need to do now is wait for it to actually test the metal and see how strong this momentum really is. In order for this to be going long, we must get a daily close above that 67.50 area. If we do that, we're going to break the wicks here that we've got here. We're going to break the 50 moving average and out of that cycle. And then we can start looking at the next target, which is around that sort of 68.70 to 68.80 mark. Now, that's going to be the next, obviously, reversal zone, because we've got support there and we've got reversals right through here. So this is the area that we're looking at targeting. But first of all, we must get past here. So this is still a bit of a scalp. But if we do get that, look, the momentum is going to shift to a level where you could say, all right, we might be starting to look at the bigger term and look for the 70-cent mark again. But until that happens, we're looking for potential weakness. Look for a small reversal around this level on a smaller time frame. Drop it through to the time frame. See if we can see a series of lower highs and lower lows. And if we do get a close below the 66.50 area, then we can start to target the 65.80. So it is all scalping about the Aussie USD at the moment, but that's okay, because look, some of the scalping opportunities have been fantastic right through these last few weeks. The markets have been very good and sticking to these zones, but it is very strong resistance here. 20 moving average, roll reversal. If it breaks through there, we know our next target is a reasonable level away around that 68 sort of 80 area. But if we do get that reversal here, we know why, and that really bodes well for a good short down to the 65.80. Good trading either way, but just keep those ones short. And we'll go over to the US dollar CAD now. And this one's seen a big sell-off this week, as you can see. Look, the telltale sign was this candle here. When we were moving up here, it found support at that roll reversal zone, of course, at around that 36.80 area. Once it did attempt to go up higher and then reverse completely, didn't reach the previous high, as you can see, and it's a big shooting star candle. Once that happens, you're on the lookout for weakness, no question about that. And that weakness came in the next candle. Your entry point was the 136.59-ish area here. When this daily candle closed below the 20 moving average and slightly below our level here, that was our cue that, this weakness is set in. We obviously failed to make the equal high or even a new high. And the weakness set in a lot earlier than that. Once it broke that zone, then down it came down to the next support level, which is around that 135.20 area. You can see here all the way through, it's been a pretty strong support level, and it's been resistance through this area here. So these levels always hold up pretty well. Like, you can tell generally when you're going to get a pretty good support level to aim for when you are shorting, and you always got to respect it. It doesn't mean it's not going to stop falling from here, but you would probably expect that we're going to see some sort of an attack by the buyers to actually try and stop the fall and try and increase it up. Now, of course, if we get a change of trend, a smaller time frame change of trend on a smaller time frame, we're going to look for reversal moves back up to the 50 and the 20 moving average, sort of in the middle of this channel, around that 136 area, all scalping again, 60, 70 pips. But if it fails to do that and break through this level without any resistance whatsoever, then we're going to be looking at the next real serious level, which is about the 134.20 area. You can see all of these highs right through there. That's going to be the next support level if we get a breakthrough here. But in the first instance, we'll be looking for a reversal, even on a 1 hour chart, or yeah, if you see a series of higher highs, higher lows, our lightning bolt, you can look to the middle of the channel around that 136 to the 20 moving average or the 50 moving average. But if the daily closes below this level, below the 135.20 area, then we start to target the 134.20, moving those 100 pip cycles. But good scalping opportunities again. All right, US dollar yen now, and yeah, this one's behaved itself as we would hope this week. Found support where it needed to find support at around that 131. You can see the little hammer candle there pulled up really well. That was our signal that this level is pretty strong. Okay, when you see a hammer candle like that at a very strong level of support, generally speaking, you're going to get a move up. So that was pretty good trading. Once you got that candle there, if you needed more confirmation, that was the one. And if you were taking profit at the 132.80 is the exact place you would have taken profit. Because one, you got a 20 moving average there, but you've also got a whole heap of bodies closing at that level. You can see it right through here. We've got all of these candles closing. So it's obviously a very important area. And you know what I think about the 80 zones, the 132.80, the 132.20, those 20 and 80 levels are very, very strong, nearly stronger than double zeros most of the time. So always keep that in mind because it's a very, very good point to aim for. But there it is there. It's already hit it. So you should have been able to get in around this level here. If you follow us enough, you know we talk about this all the time. So hopefully you were able to get hold of that. This is the level where it's going to be a lot of trouble for it to move forward. You got a 20, 50 and 200 moving average all within the space of 100 pips. So that does spell a little bit of trouble for it, but it doesn't mean it's going to stop. But yeah, it's likely that we're going to see a bit of a reversal at this point. So if you were long for the longer term, you might have to stick out a bit of a pullback. But if you see a bit of a reversal here and you see a small series of lower highs and lower lows on a smaller time frame, it might give you an opportunity to get back down to that 130.80 area, which was the previous support. But it's really a wait and see on this one because the move has happened this week, and yeah, obviously the take profit has been hit. So if it does indeed break the 20 moving averages and it closes above 134, we'll be having a very different conversation next week. But it's got a little bit of work to do before it does that, and we'll let the market prove itself before that happens. Okay, over to the dollar index. It's been a bit of a mixed bag this week for this one. It's really, look, it tried to reach the 20 moving averages and failed to do so, and it sort of found itself exactly where it was last week. So no real information here. But if you zoom in, I mean, anyone who's done our course, yeah, you would know that there would be head and shoulders here that has actually, completed really. Like you can see, you got the shoulder, the head, and the lower shoulder, which tells you all you need to know about the weakness of the market. Now, what I'm talking about is this one here. Okay, so you got your shoulder, your head, and your lower shoulder, which is a sloping inverse. It's not an inverse. It's sloping head and shoulders that has a weakness in the right shoulder. So when you get that, the right shoulder means that being weaker shows you that the market power was actually less than a normal standard head and shoulders. A standard head and shoulders would have equal shoulders, okay, or a less than standard head and shoulders that's got a bit more strength would have a higher right shoulder than the left shoulder. But this one's got a lower left shoulder, a right shoulder, which tells you that it's weaker. The market failed to actually get to even the previous shoulder, and the 200 was one that pulled it up. Once it started trading down below the moving averages, which was obviously last week, you can see that this was a neckline, and once that neckline was broken, you can see that it basically continued on to around that support level that we expected it would probably get to. Now, it has gone up there and tested it again, but there's no reason to think that the strength is going to return anytime soon. It's got a lot of work to do, in fact, to actually get strong again. So you would think that the weakness will probably continue down to at least the 101 sort of 20 area to really finish off this support properly. But just be mindful, though, that it is a dollar index and it can change on a dime. The euro is the one we really want to be talking about, of course, because it's the one that benefits from that. Now, the euro has broken that key zone this week. It did last week as well, but now it's came back, tested the 20 moving average, absolute classic trading, as you know, hit the 20 moving average and then's gone up and busted it. Look, it needs to really close above here. It needs to close above the 109 sort of 30 area with a daily candle to really confirm the lightning bolt that we are always after. And then we're looking at the 110. It's pretty straightforward trading on the euro, really. It's been pretty good. It's been very good in terms of support holding where it needed to hold. And obviously forming the patterns that we need. The 20 moving average has been a blessing for it, but it's got a little bit of work to do now. Look, you could have traded off the 20 moving average, of course. That was a pretty reasonable trade, actually. But yeah, it needs to break the 109.20, and if it does that, we're going to break above that level there, and then we're looking at the 110 in the first instance, 110.20. But after that, yeah, we're not even going to look past that until we actually see that break. It's no point. If we get a reversal here and it starts to weaken at this level, then we start to target the 20 moving average again as the next support zone on the way down. But pretty good trading on the euro, and it is looking like it wants to bust out. It's not very far from doing it, but of course, yeah, we have to get that close up there first before we start to get excited about that one. And then we've got the S&P 500, of course. So here we go. So now this one, look, it's showing strength, no question about that. All the support held up here. Look, indices are great from a technical standpoint. They hold up really, really well, and the technicals are generally really good. So hopefully you're able to take advantage of some of these moves off this base. You can see that we came down here. We're well and truly trading above the moving averages now, even though they are all basically running parallel with each other. We're well and truly trading above them, above that trend line, which has done its job. Now, really, the very first target's going to be the 40-80 area. I did a video on this earlier this week. But yeah, this is the level that we want to be targeting for the first move. After a break above that level, the 41.80 is the next level. Obviously, you can see very clearly why, right? Like, you've got the very strong resistance at that point. It's done it for several weeks at a time when it did get there. That is going to be a target. But until we break the 40.80, that's not going to be the main aim. The main aim first is to scalp it up to this level here, get a daily break, and then we look for that 41.80. If we get a reversal at this point here, which is likely enough, like we've got resistance in front of us, and we see a series of lower highs and lower lows on a smaller time frame, the obvious short is down to around that 4,000 marker. It's only, like I said, it's only a scalp, but the moving averages are going to form what was resistance is now going to be support, you would expect. So now that it's trading above it, all that is going to be behind it, and you're going to find and expect to find support there if it does pull back. So that would be your target for the scalp. But pretty good trading. Look, we've got non-farm payrolls next week. It's obviously a very, very big week of news, and that's going to be a big determinant of where we move from a longer term perspective. But in the meantime, look for this move to fill if we get the daily close. But if we reverse around this level, back down to the moving averages, and that will give you a reasonable scalp down. You're only talking a handful of pips, but it is a scalp. So I hope everyone's had a great week's trading. I think we had some really good opportunities. Again, the levels are holding up. We've had good enough moves that you should have been able to get in and out with good risk-reward ratios. Hopefully you're able to take advantage of that. Have a fantastic weekend, and I look forward to seeing you all next week.